Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from TheTechnicalTraders.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Chris, what's the stock market look like right now? Some people saying it looks like it's topping out. Others say it's showing signs it's going to go higher and higher. What's your take?
Yeah, well, I mean, from a technical standpoint, the stock market, all the U.S. indexes are still in a very strong uptrend. They're holding up above, their 20-day, their 50-day moving averages, which is a very good sign. All the moving averages are also sloping up. And when you look at the daily chart, especially on like the Dow, the SP 500, and the NASDAQ, they've all formed really nice bull flag patterns, which are pointing to a rally in the next over the next 5 or 6 trading sessions. If this market can get some legs here, which it's very, very close to, I think we could see a really nice pop and run in the price of equities going forward here. So I'm looking forward to higher prices for stocks, and I think that might put a little bit of pressure on some of the defensive kind of sectors like bonds, maybe precious metals a little bit. Simply because bonds have definitely been on the run, and they're outperforming the stock market in the last over the last couple of weeks here. So that's a sign that there's fear in the market. But keep in mind, the stock market likes to climb a wall of worry, and I think we're going to see another pop in the stock market, and we're going to see bonds pull back a little bit as people start to get more committed and realize, hey, they're missing out on the stock market trend. Stop trying to pick a top. Get in there and ride this market for as high as it wants to go.
Well, so far it's definitely been a dipper's market. If you want to get a bargain, you buy the dips. Is that the trend that's going to continue?
Well, yeah, I mean, a trend is more likely to continue than it is to reverse. And this year we have seen the SP 500 dip 1, 2, 3, 4, 5, 6, 7 times to the 50-day moving average. Each time, within a couple of weeks, it was hitting all-time new highs and just kept on going up. And we just dipped and hit the 50-day moving average about 2.5 weeks ago. So it definitely is a buy-the-dip mentality. The charts are pointing to higher prices. The trend is up. You can't really argue with it.
What's going on with gold right now?
Well, when we take a look at precious metals, gold is down a little bit today as we're speaking. And obviously metals and miners have been in a really tough patch here since last July, really over a year already. And it's trying to build a base. Gold really has a lot of work to do before I'm going to start to get really excited about it. I still think it has to break and hold $1,900 or the $1,920 per ounce level, U.S. dollars that is, for it to really kind of have built a base and to actually be making higher highs and higher lows on the chart. So there's more work to be done, and that really carries over right into silver as well. Silver's been trading sideways and has been trending lower for the last couple of months here, and it really has a lot to the upside to really build a base before it's going to start to break out. And the gold miners, they're actually starting to show a little bit of signs of life in the last week. They have had a nice little pop and rally, but they're still making lower highs, lower lows. They're below their key moving averages. Their moving averages are all sloping down. It's the complete opposite of what we see in the stock market. Right now, money is still moving into the risk-on stocks, and these defensive plays are under pressure and kind of underperforming in most cases.
We'll have more with Chris Vermeulen right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's going on with crude?
Well, crude oil ended up reaching one of its Fibonacci measured moves that you and I had talked about months prior to this, that we were looking for $78 per barrel, $76 to $78 per barrel hit. And that's based on a prior move from November up until March and a pullback from there. And we hit that. We hit that to the T, and then it reversed, and we've seen crude oil pull back pretty dramatically from 77 all the way down to 65. It has now kind of bounced back up. It's trading around 70, but it's in this sideways bull flag pattern, a much larger bull flag than what we're seeing in the stock market. It's actually similar to the bull flag that crude formed from March all the way through to almost the end of May. So we're talking about a multi-month bull flag pattern. I still think there's still another month or two to unfold in crude, but it is still pointing to higher prices. It's pointing to $88, $89 a barrel. So there's still a lot of upside potential in crude, and really this is just the first pause before it really starts that next run. So looking forward to the end of this year, I'd be looking at $89 for crude oil to be hit.
Natural gas, what's going on there?
Well, natural gas, it's funny. When the stock market crashed and we had some sharp pullbacks a few weeks ago, the only assets that we saw rally, which actually happens more often than not, and most people don't pick up on it, but the U.S. dollar typically rallies when there's panic in the stock market, and we tend to see natural gas rally. I don't know why, but it has done it for years, and it continues to form a series of bull flags. It has been trading sideways for the last week, but it is primed and ready to have another run and break higher. I think there's potential for natural gas from where we are talking right now. I think there's another 7.5%, 8% upside move from where it is, bringing it to near 440 on the chart. So it's going to be interesting to see where it goes, but natural gas is in a very strong uptrend. When you look at it going back several years, these are multi-year cycles that have been coming into play, and we hit one of those in 2020. And there's still a lot of upside potential. If we could get back up to around the $4.50 or $5 for natural gas, that'll bring us up to a previous resistance area. I think that's going to happen this year, and then I think it's going to fizzle out. That'll be kind of the peak in a major multi-year cycle, and it might fall out of favor for some time. But it's definitely in a bull market. It's on the run, and there's still quite a bit of upside to go.
Copper, it takes 300 pounds of copper, 136 kilos to make an electric vehicle. Do we expect copper prices to go up because of that?
Yeah, copper's had a really nice run over the last year and a half. It's just, it's gone from $2 all the way up to $4 and about 80 cents. It has since then pulled back. It's actually showing signs that it's starting a new downtrend, that it has topped out and now it's going to be heading lower. It's got the signs of a capitulation kind of below off top, a euphoric top where everyone chased prices up and they got all panicky. A lot like the lumber market. If you look at the price of lumber, how it exploded to the upside. The copper chart has broken down. It's forming a bear flag, actually very similar to what Bitcoin did as it topped out earlier this year and then had that huge sharp correction. And copper really is potentially today has a reversal bar to the downside. Copper could be starting a big move down. It's at $4.38 right now. I think there's potential for it to go all the way down to $3.80. So I think there's a lot of downside potential over the next 1 to 2 weeks for copper alone.
What's going on with Bitcoin?
Yeah, Bitcoin continues to build this multi-month kind of consolidation phase. It's trying to figure out, is this a bottom that it's been carving out since the May kind of June lows there? and is it ready to rally and break out above around about 42,000? If it can break above 42,000 and hold up there, it's very quickly going to rally to the $50,000 or $52,000 area. But right now, it's kind of in no man's land. It is also very close to breaking down, reversing here to the downside, and falling all the way down to roughly 20,000, potentially 60,000, or even lower. So we really need to see which way Bitcoin is going to break out of this multi-month consolidation. Getting involved at this point when it's stuck in a sideways range is a very kind of high-risk play. You're really just taking a 50-50 bet, so it's best to see which way it's going to break and then potentially take advantage of it on the breakout and ride it for the next target. So it's definitely a high-risk play here as it consolidates. We just need to see which way it's going to break.
Is there a change in attitude? For quite some time, some people said you just pick your favorite ETFs and hang with them. Or is it now a case of you have to pick individual stocks and forget about ETFs?
Well, I'm a firm believer of trading ETFs. I'm not big on the buy and hold strategy. Just pick it. I think individual stocks require a lot more work, a lot more. You have to be a little quicker. You got to follow the charts a lot more each day. ETFs, you're kind of more or less playing tides in sectors, because ETFs usually aren't for individual stocks. They're for a basket of stocks in a sector. And so they move much slower. I find the average cycle when you're trading ETFs is around 39 or 42 days, somewhere in there. So it's a much slower move. You can put more money in one trade because it's not really volatile. It carries a lot less risk. And you can put in more money and catch a wave, versus individual stocks can pop and drop and have really big gaps and halted trading, things like that, which you just don't really get with sector ETFs. So I'm a huge fan of ETFs. That's my focus. And I like trading either the indexes or sector ETFs with my trading newsletter and subscribers. And that's kind of where we really focus on doing. We watch some of the individual stocks to get some ideas, but we still follow and trade the ETFs.
Chris, thank you so much for chatting with us.
Hey, thanks for having me, Jim. Always a pleasure.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.